Hi everybody, let's go. I have tentatively taken a short on this oil by using very low leverage and a very tight stop because I just think the dollar's very strong. This is a very good move, but it's in a very tough area and it's struggling. And a lower close, potentially a sell signal there on the 7th. So new high in the range, immediate close lower. It could so easily pop up. So if it does, that's fine. I'll take it on the chin. It's very, like I said, a very small position at this stage. But if we start to close underneath this 87, I think this could drop back. Now we've got triple witching on Friday. Triple witching is where all the futures contracts roll over and the options contracts expire and reignite. So you tend to get a corrective move as the contracts roll over. So that's another added bonus to this, but trade what you see. A lot of resistance up there. And just a three-way leg up from this breakout pattern down here in June. Just looking to see if this can reset. So of course, I'm going to like, bear with me 1 second. So if we do come off here, then I can capitalize on it. If we look at a weekly chart, it's very counter trend. So but if we start closing on this 87, I will add and make it a more significant trade. Look at this weekly. We've had a 5-wave pattern down there into March. This is potentially a 3-wave corrective pattern. So you got 1, 2, 3, 4, 5. Now we've got a 1, 2. We've had a potential 3-wave move into this resistance. So we've seen drops from here. We're seeing drops from further up here at 90, 95. But if we do tip over here, I think we're losing momentum with the contract changeover as well. I just think shorting that high is worth a try at this stage. And like I said, you don't have to risk much money because the risk-reward ratio is going to be great on a reversal like this if it pans out. Right, moving on. Let's just take a look at the dollar. So dollar has been very buoyant. So it's already punched into a resistance area here. And we've got the Fed meeting on the 20th. The majority view is the Fed are at least going to pause. If that's true, then we've got further to drop on this. So if we then, if this breaks this recent high, then that is, I don't think it will. I think this will pull back. I think we'll start to drift lower here. That could not help my oil short, but that's fine. It's only at the moment it's only a trial short anyway. It's what I call it. The oil trade is what I call a marker lot. So I'm putting it out there that the oil may be done. If it's not done, then I'll just get stopped out and I'll walk away and reassess. Right. So if we finish the week lower here, then this moves to the downside here. Could continue. So we could see a continuation of this drop from October last year if we can push out of this pattern. So that's what I'm looking for. That's on a weekly chart as well. Let's look at the euro. So the euro is the biggest component of that dollar basket. So you would expect this to drop. So if we've come off of this support on the long side, then we may see a move back to 110 plus. And the pound, we've got Bank of England meeting in the week after the Fed, I believe. So pound looks like a sick patient here. We've this spike up into this April 22 drop zone has been sold into. So we have got a series of lower close here. Last week is no exception at all. So we're under the 20-day average. So anything into 125, 126 at the moment is to be shorted. With a view to that coming down to 122 or lower. UK jobs tomorrow. So we're going to wake up to UK jobs. Now let's stick with the dollar and look at commodities. So gold. Really, we're under the 20-day average, a lower close last week. So this is really struggling. So with the contract switch over in the futures market, gold could so easily drop back into close to that 1900. All the time we're under that trend line. All these highs at the moment, ever since we punched higher up at the area, beginning of the month, the highs are still sold into, and we're really just clinging on at the moment with a lower low and a lower high. So it would suit me if the gold dropped back to this 22nd, 23rd of August. That would be fine. Then I would start to buy up. So the contract rollover might be affecting the commodities as well. And it's certainly, the wheat is just not doing it. So this is a daily chart. So we had a nice push up on Wednesday, but all we did is knocked into the 20-day average, and here we are back into the buy zone from 31st of May. So if I'm out of this at the moment. I've just let myself get stopped out. If we were to come down to 550, 557, that suits me fine. I'll buy back in. If we turn around here in the next few days and pop back up, then I will get back in. All right. Now I like copper. The copper's coming to this buy zone down here, and a very strong buy signal today. So any move into 88.30, if you want in on this, try and bid 83.30 with a stop under 82 and a target potentially. We're talking about electrical vehicle, copper in relation to electrical vehicles here. So if this holds, I would have thought we're coming to see 90. And the last time we were down here, we sprinted up to 95. Well, that's not true. When we were down here in January, we sprinted up to 95. We broke down further in May, held here in June, held in August, and now we're attempting to hold here again. Let's look at the weekly on this one. I think it's worth looking at the weekly. So yeah, this 85 is absolutely crucial. We start clinging on and really gripping onto 85 with volume, then expect some higher numbers into 90, 95, etc. Potential big bull flag. So this big drop in July 22 got bought up. That is a trade that I like and I will invest in. Their new natural gas is struggling, but hey, we looked, but I like it. I think it's viable. We looked the same way back down here in the same price pattern back in April 21. So I think this is very viable. And you know what? One of the easiest ways to buy this is in ETF, so that you're not using a lot of leverage. You can sit in it. You can take some heat if it gets a bit wild. But normally the season for natural gas is to push up right to November, when all the major contracts are put in place. First or second week in November, all the major energy contracts are in place. And you can see now this shot up in October. So we topped out in mid-October 21, topped out obviously as the war broke out in May 22, new high August 22, and then subsequently we really wound down. Good question. Farmers are planting barley. Yeah, barley is a very interesting one. I've tried, you know what? It's difficult to trade barley. I've not checked if there's an ETF, but the main exchanges don't do futures in barley, I discovered. So I think planting patterns have a major impact on grains. I spent a lot of time a month or so ago over the summer looking at the fundamentals in the wheat and the corn, and the yields, the planting areas, the yields, all the fundamentals were very bearish, all bar weather. So let's have a look. So I am still very interested in the fact I've let myself get stopped out of wheat. I had a very tight stop because they're still into support here. It's still not broken. As long as anything above 580 is still viable. So I'm just going to sit tight and see where we are as the week unfolds. So I'm still very bullish on the fact farmers are planting barley and other grains could be to wheat's advantage. We'll look at soybeans. Treading water mid-range as well, and the corn very similar to the wheat, sitting on, I see this 467. I'm moving to 467 on the corn. Will get me very, very interested on the corn because that's the June 19 highs. So I'll be very happy for these grains to continue lower into major support. And then I can reassess. Orange juice. Look at orange juice. When these grains, when these sorry, not grain, when these commodities, soft commodities in particular, catch a bid, wow, do they go? And look at it down here in October 21. This looked as if this could fall back underneath 10.5. And yet here we are at 33 nearly. So big push up, big pullback, and then they just bought it and broke it out. So yeah, I still like commodities. Right, let's go to let's come away from commodities for now, and let's just have a look at stocks. We talked a lot about gold, so let's have a look at the miners. If this PAF volumes have been better down here, and so if we close above 15, then I think that's a big signal for PAF. If we close under 12.5, then that's obviously very bearish. So whichever way we come out of here is going to be the real test. It's going to be the real opportunities. We're going to break up, we're going to break down, at this all the time we're in this range, shuffling around here, we won't know. I'm buying the dips, and if we can break, I think we could see 24, 25. Otherwise, if that does falter, then I will reconsider and potentially start to shed some of my stock. Quick look at the others. Sideway with very low volumes. Stay out of Griffin. Centamin. Yeah, so they're not great. They can't on this weekly. This is a weekly chart, by the way. They are really struggling. Let's put it back on the daily. Okay, big push up here, late August. Volumes are improving. Let's go back to, let's look at Hoss chart. No, see that's the volumes were very low up there, and hence the reason why it's dropping back. Interim on the 13th, right? Thanks for that. That's very useful. I think this one's Sylvania, isn't it? Yeah, nice move on, very good volume. So this looks as if it's in play to me. I would be very interested if that were to drop back at any stage. Yeah, I think that's viable even at 75. SLV, Sylvania. Very nice pattern. Let's just see if we can pull back into it. There's a lot of 79.80 is a struggle for this one. So if we fall back into 70, 71, 75, or even 75, if you keep stop out of trouble, I think that SLV could be a good one. Man Group is picking up. I think anything if you pick up 320 but stop underneath that support, that could be useful. I would go into that one. Let's look across to materials. And let's look at Elementis. That's been on a good move off of 100 into 115. Any pullback to 110 is viable. TPI cap. Liking the way that's holding 164. So any pullback into 160, 162, I like. Glencore. Decent move today, decent push up. Rio. Very swift move. That is very viable. Any pullback into 48. Very decent close today. Bulls have really held that one up well. Right, let's look at energy. Tolo. Still sitting up. So it's hit a lot of problems at 40, 39.5, 40. Any pullback, if you're patient, you may see 33.5 on that. UKP. GK, keep an eye on this. This 93 is attracting some volume. This was up as high as 280. Wow. So there's a potential recovery stock. GKP could be one to watch. Just be very careful. I've not done any research on that, so I need to run the ruler over that one. No, not consider that one. And let's have a look at some retailers. I still think this card factory is doomed. And it's got a lower height here. So I would not be at all, if that closes underneath 97, I think that's dust. or to use a more common phrase, toast. Tesco's, it's okay. It's holding up. Sainsbury's, the same. A lot of resistance overhead. ASOS, struggling. But there has been some interest down at these levels. I believe this one is only just coming back into profitability. Travel, EasyJet, decent push up here. Chewy, attempting to come off this floor. I mean, but this is not the time to buy Chewy, I don't think. So much going on in the travel industry. Right, I mean, let's look at some financials and I'll leave it there. Barclays. We're coming off this 143 nicely. We're in a clear channel up here. If we get above 155, I think that can recover. It's a good stock. High interest rates favour it. Let's just see. I would give it more time. Let's just see where we are after jobs come out. And also we've got a lot ahead of us with the Fed and the Bank of England meeting in the coming days. Prudential, kept a close eye on this one. I'm very surprised that's not sitting up. Very surprised. That had a lot of volume when it got up to 10, 15. That is not at all happy and still looks lower. Very, very surprised. Right, there was a couple I wanted to share with you. Let's just go to those now. Let me just get my list. Here it is. Right. Let's look at Playtech. Andy, anything you are looking at the moment? This was a bit of a darling. See, look at this big shoot up here on the 19th of October, 18th of October 21. We've never really gone far out of that range. So let's zone in on that. These guys do the gambling platform. That is a huge amount of support under there. It's not buyable now. If that starts closing above this 530, I think that's a good recovery stock. Otherwise, steer clear. The other one I want to look. Another is direct line. So that's had a good punch higher. So now the main support is 162. So if I think this could drop back. If that drops back into that support, I think direct line is viable with a view to recovering to about 230. But I'll be very patient and not jump in. Nope. What's that got? I was looking at Wood Group. Oil Services, John Wood, not Wood Group, John Wood. Ooh, no. So look at PFC. Petrofact. Petrofact is much better. If we, at any stage, if we break that 85, hold on to your hats, because I think well, hold on to your hat. I think it's going to do well. I think just go I think we'll see above £1 on that. But if Petrofac can climb up to that. This is a big contract that they won here on the 30th of March. We're still sitting in that range. But in the meantime, the volume is improving. So again, just be patient. Try and buy 75 with a stop underneath 69, 68, 69. So what else was I going to look at? GSK, yeah, pharmaceuticals. Let's look at, before I do that, let me look at Pfizer. Wow, this is really not doing it at the moment. That's in a very, very interesting area. If we turn around above this 34 anytime soon, I'm in. That's a very, very interesting area. Right, you were saying GSK. I'm going to do a talk very soon on AI. Oh, yes. Because AI is going to have a massive impact on this industry, or what it already has. Right. So I would not chase this market. I would not. If I saw 1408 or 1410, I would buy. Dark. I did look at dark today. Yes, that came up on my scanner. Yeah, so we were down there at £2. Wow, that's a good move, isn't it? I was watching this for ages and took my eye off this one. So we had a big shunt up on the 18th of July. Yeah, are you in dark at all? This came up on my radar because of this. Good, okay. Well, it looks as if we can recover to £5, 5.10 at this stage, but I would want to buy a pullback. I would not want to get in at this level. It may not do it. I mean, if I would really want to buy that at the 350, 360 mark, but it may not do it because the volumes are picking up here. So at this stage it looks higher. So, but I would set an alert for that if that did dip. Looking to sell GSK, are you? Right, okay, let me go back to that. You're looking to get out of it. Not actually sell it. Yeah. You're looking to get out at what price? Oh, yeah, it is a big area. It is a tough area, isn't it? 15, right. We're not far off that now, are we? So we've seen 1482 by the looks of it. Well, I tell you what, if there is a lot of profit taking on this, and this does dip back to 1388, I would be in. I can see why you want 15. I can see why you want to get out of 15. Obviously, we were up there at April this year. But I will buy pullbacks on that. Brilliant. Thanks for your contributions. Anything else you want me to look at this stage? No. All right. Thanks for your company and your input. I will talk to you soon. Thanks, everybody. Bye.